So Robert, in your report, you say we have mixed indicators, but overall it looks like we still have a good start to 2018. And let's first talk about a real GDP, the estimates that we're getting so far.
Yeah, we did get that first estimate. There'll be two more estimates before we get to the final. That first estimate of fourth quarter GDP last year came in showing 2.6% annualized growth. That's not bad, but it is a little bit on the light side compared to consensus. In my view, though, this is not a bad report. If you dig into the numbers a little bit, consumer spending was very good, boosted by replacements on automobiles that were damaged by the hurricanes. Business investment was very good. Government spending was stronger than expected. But what held the number down was net exports. And we had a surge of imports in fall of last year. And actually, some of those were iPhone 10s. So the launch of the iPhone 10 actually contributed to a weaker GDP report because it pulled the trade balance the other way. We also got the durable goods report. That's new orders for durable goods. That's considered to be a leading indicator for the manufacturing sector. So how many airplanes, machine parts, electrical components, stuff like that. So that number, which is very volatile, has been increasing steadily over up for the last 4 out of 5 months, up 2.9% in December. So yet another indicator that the manufacturing side of the U.S. economy ended last year in pretty good shape, implying that we're beginning this year with some good momentum, and that's good news for all of us.
Let's move on to housing sales. You said that in December they fell with a thud, but mortgage applications are up so far for January. So how does that all play out?
Well, we're seeing some mixed indicators. New home sales in particular were very strong in November, but they fell back hard in December. Existing home sales also fell in December. I think by and large, that's really consistent with the very bad weather we saw late in the year. The good news there is when we look at a high frequency indicator like mortgage applications, and we have the first 3 weeks of January all growing pretty consistently, and that tells me that's a good likelihood that home sales are going to snap back up here in January.